exciting listing, and it comes at a nice time. You have seen quite a lot of appetite in the healthcare sector at the moment. The only thing that really concerns me is the fact that they're 92% exposed to the hospital division. So from a diversification factor as a business, I think Netcare and Mediclinic are a little bit more diversified, but their operational ability within that hospital division is actually very operationally sound. And I think they're poised to do quite well. And I think it is something that's going to be, a lot of investors might want to expand their portfolios and start to put some money into the Lifecare listing just to get some more exposure into the healthcare sector.
Housing starts out of the US today, coming up 5.8% to 672,000 annualized. The market was expecting a 3.8% increase, and it's off the levels achieved in March of 635,000 annualized. Again, though, we've had negative data on the housing permit side, which is that precursor to construction activity going forward. That was down 11.5% at 606,000. What do you make of the mixed data out of the US? And of course, then we've got to chat about the market volatility and what we saw in the Dow last night.
I think at the moment the data that's coming out of America, I don't see too much emphasis played on it at this point in time, although possibly you could argue there should be more emphasis placed on it. And that's really just around the potential of further defaults in the Eurozone and the uncertainty that we sit on in a sort of global perspective. So look, you are going to start to see some mixed data out. I think the low base effect is sort of out and sort of bearing its way out of the system now. And, just looking at company earnings going forward, it's going to have quality earnings that are going to drive companies forward. And the same applies to the data within America. The low base, again, is out of the way now, and you need to see some sustained growth and some GDP numbers that can start to tick through as we move into 2011.
Portugal and Spain today announcing their austerity measures, and EU finance ministers coming together with one voice saying that they don't expect the crisis in Greece to spill over to the rest of the continent, and that they are sure that we're not going to see the territory going back into another recession. Do you think we can put faith behind what they're saying?
This morning when I went to work and I sort of looked into the whole which way the market's going to go, potentially in the next week, it kind of gave me a little bit of a discomforting feeling knowing that markets in the very short term are purely driven by information flow. So yes, we do have this information flow that gives a sense of comfort for today. But what happens if there is a default or some further information flow on the negative side and there's a panic sell-off? We sit in an environment where there is fundamentally stocks are very fully priced at the moment. And, when a market is fully priced like this and you do have negative news flow, markets look for a reason to sell off. So again, for me to predict which way this market's going to go in the next week is very difficult. I sort of remain very cautious, sit on my hands and say, until we get some further, concise direction out of the Eurozone, I'll just say be very careful.
Yesterday we saw the euro dollar moving to a 4-year low, and it did retrace on the back of comments that we're not going to see a recession in the Eurozone. But if we look at the euro going back into a free fall, markets are going to follow suit. Exactly what you're saying. Market sentiment, people will be scared and they're going to pile out of equities. What does it mean for South Africa, given the fact that we're so closely associated with risk, the level of risk out there, and certainly when risk levels are high, we tend to see a retracement of funds from the South African equity market, bond market, alike?
Look, I mean, you've got to look at it from a sort of broader perspective and say, when everybody's, running for the hills and trying to, scramble into cash, I tend to say, at some point you've got to take a contrarian view and say, well, wait for maybe fundamentals to unwind a bit and look to participate. But I don't potentially see the euro staying, this week at the moment. I think, if anything, as a portfolio manager taking sort of a year, 2-year, even a 3-year view, I'd be looking to get involved and actually participate in the Eurozone. So personally, I'm of the opinion that I'm starting to switch over and start to take a contrarian view to what we're seeing at the moment. But again, there is a lot of risk because markets are purely driven by information flow at the moment.
Mondi at the top of the top 40, up 3% today. You're not overly enthusiastic about the paper stocks, are you?
No, it's not something that I play too much in. But, I think a lot of it is driven by the underlying commodity prices of pulp. And, it's not a space that I tend to look at and sort of see fundamental value unwinding there.
Tiger Brands came out with results today. Interim results, headline earnings per share up 7%. Earlier, Godfrey Matiesworth spoke to the CEO, Peter McClare, and asked him what the next 6 months holds for Tiger Brands.
We continue to look on the African continent. Okay, we certainly have also started looking in Asia. Okay, broadly speaking, because we've been approached by a number of financial institutions and they've presented some potentially interesting opportunities. We're cautious about simply just running into Asia. We'd like to bed down what we have in on the African continent.
What should you do though there?
In where?
In Asia.
In Asia, again, food and home and personal care. We're not looking to suddenly be in motorbikes or something like that, but focused based on our expertise, what we know, what we do well, etc. So in both markets, or in both regions rather, there are some interesting opportunities. But you know, I keep saying, Godfrey, we must do these at the right price and for the right reasons, rather than simply wanting to put score on the board and say, look, yippee, we bought in XYZ country. Our shareholders will punish us if we do that for the wrong reasons.
Our shareholders punishing Tiger Brands today. We had 178 Rand, down 1.75%.
You know, I think Tiger Brands is a quality business. They've got some good brands behind them, and you know, it's a sound business. You know, with the results that we saw today, it just gives me a little bit of discomfort in the fact that a lot of the earnings and operating profit that you saw was through their grains exposure in the business. So you had the business sort of benefiting from decreasing commodity prices and therefore lower input costs, which really, you know, gave them a bit of a kicker. But, you know, where it sits at the moment, I kind of think that it's fully priced. You might see some potential downside. It's not something that I'd be chasing now at the moment, but it really does look attractive from a dividend point of view. I think the yield came in at about 4.1%. You know, and if you're a value long-term investor, you know, a lot of people would look to buy a stock like that just to benefit off the yield. So at the moment, fully priced. I'll probably wait for some potential downside. If I've got it, hold it in my portfolio.
They're not overly enthusiastic on their forward-looking statement, saying that consumer spending is going to remain subdued for the next 6 months. Do you think CEOs in South Africa are now overly cautious with their forward-looking statement, given the fact that they've been burnt to this point?
Yeah, I think, you know, after going through what we've been through in the last year, I think a lot of CEOs are taking an extremely overly cautious stance and sort of, you know, projecting numbers that might not, you know, on the lower end of what we could see. So I think there is a sense of overly cautious consumer spend looking forward. But, you know, it is going to be a suppressed environment. I think consumers are going to still battle. It is going to take a bit of time to sort of get some consistent uptick in our market from a consumer point of view. But I think we're nicely positioned to let the numbers of some of these consumer companies unwind and develop themselves. So as long as they're projecting at the lower end of those consensus numbers, then let them outperform, you know, from what they're projecting, and, you know, the stock prices will follow.
You have said before that MTN is starting to look attractive at the 100 Rand level. Have you been accumulating MTN?
I have, and I mean, I must be honest, at 110 Rand, I was still accumulating the stock. And, you know, when I was last...
Where's the value unlock going to come down the line for MTN?
Well, it's the growth strategy going forward. So, you know, you've got your exposure into Africa, you've got, you know, their penetration into the African markets. I think South Africa as a telecom sector is pretty saturated at the moment. And, you know, within all the telecoms companies, you've got Telkom, Vodacom, and MTN. You know, Vodacom only operates within South Africa. We did see some uptick in the price yesterday. But, you know, I think it's the growth strategy going forward into MTN and the potential of mergers and acquisitions. We have seen Bharti interested in them. I think that's fallen away, but they are on the global map. So it is something that's at the moment driven primarily by corporate action. But, you know, you should start to see some good solid numbers sort of unfold as we move into 2011. But it's a tough stock to get right. You know, I think it's exposed to sort of a higher risk exposure of the market. And with that comes a little bit more volatility.
Sasol, 285 Rand. Is it time to get excited about Sasol, despite the fact that we've got the oil price at around about $75 a barrel? We have got the Rand tracking at slightly weaker levels. That obviously ultimately beneficial to Sasol. Are you excited about it?
I like Sasol down at these levels, and, you know, in the past on the show, we've always debated the fact that Sasol has been a strong underperformer relative to the other commodities, and that case has prevailed of late. So I think at some point you are going to start to see some uptick and some outperformance in a stock like Sasol. I think at 280 Rand, it is attractive, and I would start putting it into my portfolio. But, you know, it's not going to give you great outperformance all of a sudden because now we've bought it. So, you know, the entry point is 280, possibly below. Sit on it, be patient, and I think you'll be a happy investor a year down the line.